Good afternoon and welcome to Web Chats TV. Well, it's the 14th of December and there's 10 days to go for Christmas. That's a lot of shopping time, but for some people there'll be a lot of panic buying going on, and that means flexing your flexible friend. Or does it? Joining us in the studio today is Ashley Holmes of the Finance and Leasing Association, and Ray Watson from the Office of Fair Trading, and they're going to be giving us some tips and advice about how to use credit to your advantage. Welcome to the studio.
Hello.
Now, middle of December, why exactly do you think you need to be here today?
Christmas is obviously an expensive time for everybody of all age groups, but the office is particularly focusing on people in the 18 to 24-year-old age range. Because from research we've done, we've seen that people take on a lot of credit at this time of the year. We want to make sure that they get the right deal for them, but that they also think carefully about, before they take out credit, on what the consequences are, because there's a new year starting in January. The year ends in December, but life doesn't end then. So we want to make sure that we arm them with the necessary information to make a good decision which they won't regret later. So the message really is be as choosy about your financing as you are about your Christmas shopping. Absolutely, or any other shopping. Absolutely, for that matter. Yeah. Okay, well, if you want to send your questions for Ashley and Ray, don't forget you can do that throughout the course of the chat, so please do let us know if you've got any queries about financing and credit over the coming weeks. Kelly's already sent us a questionnaire and she wants to know, are expensive one-off purchases like sofas or washing machines, for example, the only things we should consider finance on, or is it a wise option for day-to-day purchases? Now, what do you suggest for that, Ashley?
You've got to think about what you're doing. There are all sorts of ways in which you can pay for things. You can use a credit card, you can use a store card, you might be able to go into a shop and get a really good interest-free deal, for instance. A lot of people think about taking out credit just for that big sofa, that big Christmas present. But using credit is a really good way of kind of smoothing out the peaks and troughs if you get paid infrequently. It may be that using your credit card is a way of getting from one month to the other. But the thing is, you've got to understand what you're doing. And the last thing is, don't overstretch yourself and don't get into debt. Use credit wisely. If you use it wisely, it can be a good friend.
What about you, Ray? What would you say? Would you use it for day-to-day purchases?
Well, I agree absolutely with Ashley, but what I would say is if people are using it for day-to-day purchases because they don't have the available cash, then they're in trouble, basically. That this is about budget planning. As Ashley said, you can smooth out the peaks and the troughs. But credit is still an obligation you have to repay. It's not free money. And one of the problems is that people find it easy to hand a card over, where they wouldn't find it easy to go and get the cash to buy something. Day-to-day purchases may be, but generally I don't think it's a good idea to use credit for that, unless, as Ashley says, you're budgeting to do that, and you know you've got the money to pay back. I
don't know you need to be too stuffy about this. It can be really convenient. When I go to the off licence, for instance, I use my credit card, because it's easier to do that. But I do it knowing that this is a debt I'm going into, and I know that I'm going to pay it off at the end of the day. So use it wisely, use it like cash. Credit cards can offer convenience, but think about the financial commitment you're letting yourself in for.
So it's a good idea to keep a running total maybe of how much you've actually put on your card, so you don't have too much of a shock at the end of the month, and actually think about that expenditure.
Absolutely. But I think just people may find helpful is that if they, on our website, the Office of Fair Trading website, where they can get details from where they're accessing this chat, there is a budget planner, and I think it's sensible for everybody to actually look at what they're spending in particular pockets, what they're spending on going out, what they're spending on day-to-day necessities, and plan your budget. Credit is part of that. I mean, credit and cash are both parts of that.
It's all money in the long run, isn't it?
Yeah, absolutely. Yeah.
That's the frightening thing. That's what we all forget. Plastic is equally as part of your spending as cash is. We've had another question in from Georgie. I want to see what you think of this one, guys. She says, I'm confused by APRs. Now, I don't think she's the only one. I thought APR referred only to interest rates, but I've heard that they also sometimes include other charges. Is this true? And if so, what kind of other charges can APRs include? Now, you probably, Ashley, what do you say about this? Because it is confusing for people, isn't it?
APRs can be dead technical, and Ray will go into all the techie side of all that. What I'd say to people is forget the techie side. APRs are meant to be an easy way of being able to compare one credit product against another credit product.
And they do vary enormously.
And they vary enormously, and it's all about shopping around. And this may sound like a very simple thing, but big APR, bad, low APR, good.
So it's just like shopping for a car. You know, if it's a lower priced, it's a bargain, and if it's a high price, you're paying over the odds. It's the same as a credit card.
Get the best price for you. It may be that, depending on how you use your credit, the APR is a kind of fictitious way of describing what happens, but it's the best shopping around tool you've got. So look at APRs, be clever about what you're doing, and think about all the kind of options available to you. But go for smaller as opposed to bigger.
Okay, Ashley's handed the baton to you, Ray. What do you say to that question?
Well, APR is obviously a very technical thing that...
What does it stand for, first of all?
Basically, it means what someone is charging you to lend you the money. So they're giving you, say, £100. Whatever they charge you on top of that, most of it is in the interest rate. But for example, if someone introduced you to a credit agreement and they took a brokerage fee from it, so they were paid by the lender, that would be included in the cost to you of the borrowing. So
it is an added cost to your purchase?
It's all the costs, basically, on top of what you're borrowing from the person you borrow from.
Okay.
And as Ashley says, it's the best comparator you've got. But one thing people should be careful of, it's the best comparator between similar products, because APRs will vary greatly. So a credit card against another credit card. But longer loans will tend to have lower APRs. So if you take a 25-year loan out, that'll be lower. So they need to compare like products, I think, is a message.
Okay, and if you're confused, where can they go to get advice?
Well, go to the OFT website. There are all sorts of advice agencies, and on the website that Ray's got, there's a list of all the advice agencies that exist. I hope everyone's heard of their local Citizens Advice Bureau. It's a free way of getting good advice on this kind of stuff.
Okay, well, don't forget, if you've got questions, you can email us your questions while this chat's going on and get lots of advice and tips from Ashley and Ray in the studio. That website, while we're on screen, is www.oft.gov.uk/consumer/credit. There you go. If you can write that down, we'll give you that later on as well. Now, Lisa wants to know, would you advise, now this is obviously, you don't know her personally, but would you advise putting my Christmas spending on a credit card, or is a personal loan a better option? That's a tricky one, isn't it? Because ultimately she's still spending the money. So, you know, is there a piece of advice that you can give that's one's better than the other? Yeah,
the first thing is Christmas is a great time to use credit, because, you know, it's one of the few times in the year when we do a bit of binge spending. We buy lots of presents. And if your income does go up and down, you want to make sure that you can buy the presents and live within your means, then think about using credit. What's right for you depends on so many things. Look at the APR. Look at the kind of long-term commitment you want to enter into. Do you really want to go in for a big, long loan to buy some Christmas present, or are you happy with using your credit card? Are you happy to go into the shop for that best deal? If you want best deal shopping around advice, every Sunday newspaper now has this kind of stuff available. And talk to your friends and see if they're happy with the credit products they've got. But there isn't one simple answer to this.
And of course the key message is, if you can't afford to buy it now, can you really afford to pay that money later? Because you've obviously got an ongoing income. Are you going to have that extra cash next month to pay it off? Ray, what do you say to people who say, oh, I can't afford it this month, but actually I'll pay for it next?
I think there's a danger there. As I said, you have to be sure that you know how much money you're taking on. I mean, you're taking on a liability. I don't know how much money Lisa's going to spend on Christmas. She needs to plan to be repaying that over the next few months. She needs to think about whether she's going to have another big bill coming up in the early part of 2006. So rather than say, should I pay on the credit card or should I pay with a personal loan, she needs to establish first how much she can actually afford to take as credit. Once she's established that, she needs to weigh up how quickly she's going to repay. If she's going to pay the credit card off in full, she won't pay any interest. I mean, that sounds like an unlikely event, but she needs to compare between the repayments she'll have to make under both, the length of those repayments, and again on the OFT website, to give it another plug, there is actually a calculator where people can put in the loan amount and it will tell them how much they will repay on a credit card over a certain period and how long it will take them to repay it.
So that's a reality.
So she needs to look at her own resources, how much money she's got, what position she's going to be in next year, then look at the loan or the credit card.
So the important thing is really to plan ahead, think ahead, and actually create a budget for yourself. Absolutely. It's not a case of deferring till later, really.
No. Don't wake up with a January debt hangover. You know, have fun now, but make sure you can cope with it when all the fun's finished. I don't think in her question that there's one answer. Is it a personal loan or is it a credit card?
No,
I mean, all those circumstances have to be taken into account.
Sure, there's no overall answer, universal answer that's going to apply to everyone, but you have got to look at your own income and outgoings as well, of course.
Absolutely.
And I'm sure a lot of us live beyond our means at Christmas. Now, on to another one we have here. Edward sounds like he's pretty savvy. He says, I usually swap credit cards every 3 to 6 months so that I can take advantage of the 0% interest rates. Is this advisable? Now, it sounds to me like a pretty smart idea. Is he being clever with his money?
I think he's being very clever. I don't think it's just advisable. I think it's very laudable, because it means that he is actually looking for a credit product which gives him the benefit of being able to get things earlier. and he's not paying for it. So he's shopping around, he's looking for the deals that are out there, and he's an informed and intelligent consumer.
In terms of the credit card companies, surely they must get a bit fed up with lending money to people. Is there a penalty? Do they still get money back from you somehow? Is there a hidden agenda?
There can. I don't think there's a hidden agenda. I mean, one thing is there are deals where if you transfer the balance, you get 0%, but you do have to pay a transfer fee. So
Right.
anyone who's using those products needs to look to see what the terms are. And in all credit agreements, people should be looking to see what the terms of the agreement are before they take them out, whether there are any costs or charges in there. But on the assumption that he's getting truly 0% no charge credit, then I think he's a star, basically.
Edward, you're a wise man. You got brownie points from Ray here. And of course, the secret is whenever you sign on the dotted line, do read the small print. That's crucial whenever you're taking out any kind of credit or debt. Harvey says, what's the difference between credit and debt? Now, that may seem like a simple question, but a lot of people don't know. Credit sounds like a very positive word, doesn't it? And debt sounds very, very negative. Can you explain the difference?
Yeah, basically what it means is credit's when I lend you some money. Debt's when debt's when you owe me money.
Right.
That's all it comes down to.
But it's amazing the connotations. I mean, credit sort of sounds fun, doesn't it? And debt sounds terribly negative. It sounds very depressing.
It does. I mean, I'm in constant debt with my credit card, technically speaking. But
Sure.
at the end of the month, I clear that debt off, and it's not a problem. So,
Right.
so there are all sorts of connotations about debt being a bad thing and being gloomy. It's not, as long as you're clever about managing your finances.
So what is the difference between good and bad debt? Is there a difference?
The bad debt is when you're over indebted. It's when you're too stretched, and it's when the debts keep piling up and you've got no way out. You can't think of a way of finding a solution to your debt problems. And if you find that you are overstretched, talk to your lender immediately. Don't put your head in the sand. That's when you've got a real problem, and your lender will work with you to make sure there's a way out.
So there usually is a solution if you have the guts to stand up and put your hands in the air and say, I've overstretched myself, help me manage this. Where would you suggest people go, Ray, if they have that situation?
There are a range of people that people can go to. I think, as Ashley said, it's important that people go to the lender first, because a lot of people tend to ignore the problem and hope it'll go away, and it just gets worse.
So don't leave the envelopes unopened on the doormat.
Whatever you do, don't do that.
Okay.
It's not actually in the lender's interest that you fall into a situation where you can't repay, because they've then got to start chasing up debt. So they would rather come up with a way in which there can be a mutual a repackaging, if you like, so that you can pay another way. If you are in serious financial problems, then you need to go and get advice. Go to the Citizens Advice Bureau that can refer you to money advisors. There is a consumer credit counselling service which provides advice to people that have run into financial difficulties, who have a website that people can access. And trading standards, local trading standards, part of the local authority that people live in, part of the council, will be able to refer people. There's also a national consumer phone line now called Consumer Direct, which people can get in touch with for advice on these issues. So there is help out there. There are a range of people who will be able to talk to you and advise you. But I couldn't stress more the need to go to the lender.
So never leave it too late. Talk to your lender first, and if
Yeah.
you feel that they're not being particularly helpful, then
Yeah.
there are a range of people, and obviously they can get information from the OFT website, the Office of Fair Trading.
I think people tend to think the cavalry will come over the hill somehow, that
So is
something
that
will
I'll win the
arrive,
lottery
and,
thing, isn't there? And it's
in the harsh reality of life, the cavalry rarely gets there in time. So I think it's important that people needs to be in control of their credit, and I think people know when it's getting out of control. And some of the indicators are if you're using credit to pay other credit off, and you find increasingly that it's snowballing, stop it early, think about it, go back to financial planning, talk to the lenders, seek advice, but please do something about it.
Right, okay, so don't bury your head in the sand.
Yeah.
Okay, well, on a more positive note, Abby has emailed us and says, can I ever use credit to a consumer advantage? Is there a way that it's a very positive thing that she can use to aid her cash flow and make her life an easier, smoother place to be? You're nodding frantically here.
Well, we just heard about Edward. What a star he is. He's
Yeah.
using credit very, very cleverly. The other way you can use credit cleverly is to smooth out these peaks and troughs. When you go on holiday, either save up through the year to pay for your holiday, or use your credit card. There are all sorts of ways in which credit can help smooth the way you get on with life and the way in which you buy and spend your money. But make sure you know what you're doing, and keep a little record of what's going on. Money can be really boring, but the more you think about it, the better position you'll be in to take charge of your life.
That sounds like good advice to me. What do you reckon, Ray? Are there other ways you can use credit to your advantage? I'm assuming a lot of people have to make big purchases for homes and obviously things like cars as well.
Absolutely, but other things as a consumer, that there are additional legal protections in some circumstances. If you, for example, if you use a credit card and you buy goods and purchases and it goes wrong, you actually have enhanced consumer rights, because you can ask the provider of the credit as well as the provider of the goods and services to repair things, make things better if things go wrong. I think credit properly used brings benefits. We all benefit from credit because it allows us, as Ashley said earlier, to arrange our finances so that we can meet what we need to buy earlier, and then we can smooth out going forward. If an emergency arises, quite often it's helpful to be able to use credit to meet that emergency. Yeah, I mean, it's a sense of control. It sounds boring, but credit isn't a bad thing.
Well, and of course it's a safety aspect as well, especially with things like mail order and online shopping. You're not sending a cheque or cash in the post. You have a facility to pay for something without actually the ability for it to go astray.
It can offer you safety and security. You know, remember there are big companies behind these credit cards who've made sure that the system's as secure as possible. You know, how many of us have got enough money to buy a new computer, buy a car? Not many of us.
Certainly not me.
And
no.
And credit's one of the ways in which you can start buying that kind of stuff.
Okay. Well, Becky's also sent us a question. She says, how can I go about finding the best credit card agreement? You know, where do you start? Because obviously it's not like you walk into a supermarket and you see a shelf of different products. So how do you go about researching the marketplace?
Well, one tool that's very useful now, the world we live in, is the internet. There are a number of sites where you can find comparisons between what's on offer at the moment. As Ashley mentioned, and you find in most of the money pages in the papers that there's a comparison of products. One of the best ways, and an old-fashioned way, is shop around yourself. I mean, you know where credit deals are offered. Go around and find out. You don't have to commit yourself. You just go and ask, what have you got? All the main banks offer credit facilities. All what we used to know as the building societies, many of whom are now banks, offer credit facilities. There is store credit. I mean, ask. Go and find out. People have leaflets. Go back home, look at them, compare them. And
of course, if you don't feel capable of making that comparison, you should always seek advice from someone who you feel is a bit more financially savvy than yourself, whether it's a parent or a friend. Or
yeah. As Ray says, the best way to do this is to get on the internet and type in Best Buy credit card, and you'll end up with loads of pages of information. The other thing that I'd like to mention is lots of people think that there's loads of small print buried beneath all this stuff that's really frightening and intimidating. Well,
but it is!
Well, that's partly true, but you know, the credit card business and the store card business has now got some key stuff set out in little boxes that tell you all about the key features of that deal, so you're able to compare what's best for you.
Right.
There are no hidden
traps.
traps.
And that's a legal obligation that they have to do, is it?
That's an obligation that the industry's brought forward
right.
itself. It's this self-regulation. This is the industry working with consumers to ensure that you know what you're letting yourself in for.
Okay, so again, read that information before you sign on the dotted line, and then but make sure you shop around. If you're choosy with your shopping, be choosy with your credit. That's the important thing. You're shopping for that as well as your products that you're actually buying. Cordelia sent a question in. This one's interesting. I'm always wary of credit cards. She says, but offered by high street shops. Now that's an interesting one, because a lot of people say that. Are they as safe as getting a credit card from a bank or another supplier?
I think what she's probably talking about here are store cards, something called store cards. You know, you go into a shop and it's got their own brand on the front. It looks like a credit card, but it hasn't got the kind of Barclay card on the front of it, or MasterCard. It's got Debenhams, for instance. Store cards and credit cards are slightly different. Credit cards you can use all over the place where they have that logo. Store cards you can only use in that particular shop. There can be good deals on either of them. With store cards, for instance, you might get good introductory offers. There might be a sale. You go in, use your store card, 20% off, for instance. It's the same old message, though. Know what you're doing. Compare the APR. Look at these boxes. And if you think it's worth taking it out, be clear about keeping a record about what's going on. If you can pay off every month, then think about doing that.
And presumably if you do shop regularly in one particular store, it does work to your advantage if they are sending you offers and things like that. It's another perk to having that credit.
Yeah.
And as you say, if you use it wisely and pay it off, etc., and you know the cost to you, then it's...
What this is all about is consumer choice. There's lots of choice on the marketplace. You go into a supermarket, you think about what you want to buy. Think about what you buy when you're taking out credit.
Anything to add to that, Ray?
I think just answering Cordelia's question about are they as safe, I think fundamentally in those terms there's no difference between something you get which has a bank's name on it and something you get which has a retailer's name because they're all basically backed up by large financial institutions.
Right.
So in terms of their legal status and what rights you get, they're exactly the same.
Right.
So, but I mean, I agree fully that the same message applies. Look at the benefits, look at the costs, decide whether it's what you want.
Okay. Now, Joe says, can banks and credit card companies change interest rates and costs without notifying consumers, or do they just subtly change the statements and things? Are they obliged legally to let you know before it happens?
That's dead easy. The answer is no, they can't do it. Part of the small print we talked about means there are no hidden surprises. What your credit card company will do is it'll either write to you, it'll contact you, it'll send you an email if you're that technologically advanced. It will say, we're going to change your interest rate, and some companies plaster adverts in the press. So you know when interest rate changes.
So that's another reason to make sure you do open the envelopes when they arrive, so that you're aware and informed about what's going on.
Yeah. And when that rate goes up, think about shopping around. Think about dumping that particular card and moving to a better deal.
Okay. And when it goes down, still shop around because everyone else might be going down too.
Yeah, or you may have a good deal and stick with it.
Yes, absolutely. Liz has said, what if you have health problems which prevent you from being able to manage your debt? Now, we've all come across sort of emergency situations which mean things aren't as you predicted. What happens if you've taken out a credit situation and then your financial circumstances change? Ray, what do you say to that?
Well, I think it's something that we touched on before. The first thing that you need to do is go and tell the credit company that your circumstances have changed, that you won't be able to make the repayments that you were making. It's worthwhile, again, sitting down and reviewing your financial situation properly to see how much you can afford to pay to repay the credit, and then going forward with a proposition to the credit company and say, I can't afford to pay, for example, £100 because I've suddenly got health problems, my income's gone down. Seek advice, go to some of the people that we spoke about before, but the first thing to do is to try and reach an arrangement with the credit company. Okay. It depends obviously on how long the health problems are likely to last. I mean, one of the other areas is if someone's made redundant, obviously they lose their job, they lose their income. The only thing that I would say to do is the first thing to do is go and talk to the credit provider and say, look, I no longer have an income, I can't afford to pay this, can I pay it over a longer period, can I pay less over a longer period?
You're nodding frantically.
I completely agree with all that. And remember, your lender will want to work with you. If you've got a short-term problem, they'll want to make sure that they can cope with that, they understand what's going on. It's not in their interest to be nasty and horrible to you. No. But the thing to bear in mind, when you're doing this budgeting, when you're doing this planning, remember that things can change. Sometimes we lose our jobs, sometimes we have health problems, sometimes we have relationship breakups, and all of those kind of changes in your life can affect the way in which you get money and the way in which you spend money. So bear in mind that what's happening today may not be what's happening tomorrow. So be a bit more cautious about how you deal with the future.
And presumably, as most of our parents used to say, it's worth putting some money aside for a rainy day anyway, just to try and cover those eventualities. It's not always about living your life for to pay it off next month, is it? If you can save in advance.
I mean, I would agree with that fully. One thing I would implore people not to do is to try and borrow to get themselves out of problems. If they think I can't meet an obligation I've got because of change of circumstances, it's not a good idea to try and go and borrow to cover that. And there have been situations where people have done that, and all that happens is things get worse and worse and worse.
It's that snowball effect, isn't it? Which is frightening.
Yeah.
Well, talking of those kind of effects, we've got Carol here who said, I'm usually very organised about buying my Christmas presents, but this year I've left it to the last minute. She really has. She's only got 10 days to go. She says, what do you advise in terms of Christmas shopping? How do I do that without running up huge credit card debts? Now, my advice would be to go and hand make some Christmas presents at home, do some baking, or just tell everyone that Christmas is cancelled. But what would you guys say?
Well, I mean, I don't think the fact that you've got X number of days changes any of the basic approach that you should adopt. You should still be shopping around to get the best deal. People will shop around if they're going to buy furniture or they're going to buy an electrical item. They'll go to several places and find out where they can get the best deal. It still applies. I mean, the fact that you've got fewer days left to shop doesn't mean that the deals or the credit deals change.
Right.
So don't be rushed because you think, oh my God, it's a week away. and go and take the first thing. Shop around, think about it, you've still got time.
And still think about what reasonably you can afford with your income. I mean, the crucial thing is not to overspend, isn't it?
Don't panic. You know, as someone who hasn't even started shopping yet, 10 days sounds like plenty of time to me.
Okay.
Think about what you're doing, and don't get intimidated, and don't feel pressurised into living beyond your means.
I think there is a lot of pressure, isn't there, on consumers to feel they have to buy an MP3 player or this or that for their cousins or their dads or sons, whatever. And actually, the crucial thing is to live within your boundaries, isn't it?
Yeah.
But don't also be pressured into taking a deal. I mean, if someone's saying to you, you need to take this deal because you haven't got much time, that's a good reason to walk away.
Yeah.
Because people that are offering you good credit deals will not tend to be trying to force your arm up your back.
Okay.
And the deal will still be there tomorrow.
Yeah.
Yes, but the money's got to be there to pay for it.
Yeah,
that's the key thing to remember.
Yeah.
Adam says, if I make purchases on my credit cards, am I still being penalised if I pay it off every month? Is there still a cost involved? You know, if he's paying his bill every month, is there still a cost to him?
In most cases, the answer is no. If you're paying off your credit card every month, then it's interest-free, in effect.
So it's a bit like Edward, it's good money management.
It's really good money management, yeah. Two clever consumers out there watching us.
Well, I hope there's more than that. Ray, would you suggest that that's a good idea, using credit to your advantage, paying it off every month? That's good cash flow management, presumably.
That's excellent cash flow management. You're basically getting free money for whatever the interest-free period is. So, you know, if you get 28 days to pay or whatever, you've had the money 28 days earlier, you're getting that for nothing. So you can buy your goods, you can put your money into a savings account and get some interest on that, and then you can pay your credit off at the end of the period.
Okay, well, Elle says, is it best to stick with one banking institution across the board, so my current account and credit cards, or should I be shopping around and getting different deals with different people? Are there advantages to sticking with one?
Some people like the familiarity of knowing they're with one bank, for instance. It's convenient for them. It may be something they've known about for a long period of time. Your parents could have had that same kind of bank. But, you know, think about shopping around. You often tend to find that various types of credit products offer better deals from different institutions. So think about getting your credit card from over here, your bank loan from over there. Use the internet to find the best deals for you. So
you're not necessarily better off just because you feel you've got a good deal on your current account, for example, swapping and having a credit card with the same
Doesn't
company.
Always follow. You haven't got to have your mortgage with the same place where you have your credit card, where you take out your loan. They're different products and different rates apply. Think about them as products you buy from a supermarket. Shop around. Okay, that's the key advice here, running through all those questions and answers. Shop around and get the best deal for you. If you've got any questions, you've got about 5 minutes left to put your questions to Ashley and Ray here. We're talking about consumer credit with the Office of Fair Trading, and it's quite important in the lead up to Christmas because a lot of us will be running up debts. Ben has sent us a question. Is it better to take out a small loan as opposed to using a credit card? Now that's similar to a question we had earlier in the sense that, you know, it's very difficult to offer specific advice to individuals without knowing much more about them. But is there generally a sort of a weighing out scale that you use for when circumstances would be better for one or the other? Look at the APR. We've talked about the APR. Compare the APRs and those things. Ray says you can't compare apples with pears, but it gives you a pretty good idea about which product's going to be better for you. Right. And they do different things. You know, your credit card's good for frequent spending on different types of items. Think about taking out a particular loan if you want to buy one particular thing. If you want to buy a car, for instance, taking out a hire purchase agreement is a dead good way of buying a car. So think about what you're buying, and also think about the kind of credit thing. It's a separate product. It's a separate bit of the deal that you need to think about too. I'd say, I mean, see how much it's going to cost you. What are you buying? How much are you spending? How quickly are you going to repay it? And are you happy with that as a final cost of the product? Because ultimately that's how much you're paying for the car. Do you feel okay about it? Because we've just been talking about Edward and others who are experts in this sort of art of not paying anything. So if you're going to repay on your credit card in a month or two, and that's it, and you're not using the credit card again, then that may be better for you than a personal loan. If you're going to continue buying on your credit card, it may be better for certainty to get a personal loan and know exactly how much you're going to pay over 6 months or a year. Okay, assess the marketplace. That's a key message we're getting here too. I think we've got one last question here. Robin wants to know, how can I best calculate what level of credit I can commit myself to? How do you go about looking at your incomings and what you can afford credit-wise? Is there a sort of a quick way of working that out? Absolutely. Go to www.oft.gov.uk
Okay.
And you will find a budget planner in there which covers virtually everything, much to my horror when I put my own details in there.
It is quite frightening, isn't it? We all do stretch ourselves.
It will tell you how much on a weekly, monthly and quarterly basis you've got in terms of disposable income after you've met all your commitments and your normal spending. That gives you then a firm basis to say how much you can afford to spend or to put towards credit repayments. So what sort of credit you're able to take out.
Well, I think that's fantastic advice. I thank you very much, both of you, for joining us. We've got Ray Watson and Ashley Holmes here. It's part of the Office of Fair Trading credit campaign, and that's good advice for everyone. If you've got more questions, don't forget you can look at www.oft.gov.uk/consumer/credit. Don't forget, you're choosy about your shopping, but you must also be choosy about how you pay for it. So if you're running up credit, think about the added cost to you. That's what's really, really important in the lead up to Christmas and at any other time of year. It's absolutely important. That's Web Chats TV today on Wednesday the 14th of December. I'm Karen Kay. Thank you very much for joining us.